In this presentation, we will use tax software to consider other itemized deductions that would be reported on the Schedule A. We'll be using Lacerte tax software, Lacerte owned by Intuit, the owner of QuickBooks. Other tax software will be similar in that you'll have the data input process and the generation of the actual tax forms. Here we are in our 1040. We have Tim Jones, the mock client, single taxpayer, filing status, $100,000 in the wages at this point in time. If we then scroll down, we have the total income of the $100,000, no adjustments to it. We have the adjusted gross income at the $100,000. Therefore, we have the standard deduction at this point of the $12,200. And then we have the taxable income at the $87,800. Now we're going to consider basically gambling losses that would be reported on the Schedule A. So gambling losses. If you have so the typical question is, well, what if I have gambling losses? Can we deduct the gambling losses? Now you can typically only deduct the gambling losses up to the winnings. So what will often happen is you might get something that would be reporting your winnings. So you have a form that's going to say, hey, you have gambling winnings. You got to include that in your tax return. The question is, do I have to include that? Typically, yes, you got to include the gambling winnings. And then the follow-up question will be, well, I spent a lot of money in losses. Can I deduct the losses considering I had a substantial amount of those? And then the answer is, well, you can deduct those on the Schedule A if you're able to itemize, if your itemized deductions will be greater than the $12,200, and if you have a record of the gambling losses, and you can only deduct them up to the point of the winnings. So it would look something like this. We would first say, all right, there's going to be in the Schedule 1 some type of income related to gambling winnings. I'm going to go ahead and jump to the screen. I'm going to jump to a W2G for gambling winnings. A W2G we talked about earlier in the income section. That would be oftentimes where you'd be reporting the winnings that would be reported to you as the taxpayer, also going to the IRS. So we're going to have, okay, we have the gambling winnings. What do I do with this W2G? Well, you have to report it. So let's say that our winnings are at the 10,000. So we have 10,000 of winnings. And then I'm going to go back to the Form 1040. That's going to then show up on the additional information for the Schedule 1. There's our 10,000. That'll feed into the 1040. Going back to the 1040, we see now that we're at the 100,000 of wages plus the 10,000, or 110,000. Now we're going to go onto the deduction side. That's going to be on Schedule A, the itemized deduction. I'm going to scroll down to the bottom of it. We're considering this item in the other itemized deductions. I'm going to go ahead and jump to the other itemized deductions. And we have the gambling losses to the extent of winnings. Or we'll go to the total gambling losses. So total gambling losses. And let's say we can validate the losses of 5,000. So we can validate the losses of 5,000. I'm going to go back to the forms then. Back to the forms. We have the 5,000 down here. It's going to add up to 6,010 because if we go back up, we have the 1,010 up top from the state taxes. That would then flow forward to the Form 1040. But of course, it's not going to be enough to push us over that 12,200 even for a single filing individual. So note the gambling winnings probably aren't going to push you over or the gambling losses are probably not going to push you over the standard deduction unless there's something else happening, possibly the mortgage interest and possibly the property taxes on the home. However, if we had a substantial amount, let's go back over here and say that the gambling winnings now and bring that up to, let's say, 15,000. So we're going to say the gambling winnings for the W2G are now going to be 15,000. Then you could take the losses if you have the supporting information up to the 15,000 for losses that you may have incurred in order to generate that 15,000. So if we then go to the Schedule A and we scroll down and we say, okay, I'm going to change the losses. And let's say we have supporting documentation for the losses of 14,000. So it's going to be something under the winnings of the 15,000. That's going to bring us to the 14,000 here, plus the state taxes up top of the 1,010, or to the 15,010. That then pulling forward to the first page of the 1040. Now we're at the itemized deduction of the 15,010. So it would take a substantial amount to push us over if that was the only thing we had there. And note, we're not getting the entire deduction. We're getting a deduction of 15,010, but you're only really getting a benefit from the difference between the standard deduction, 12,002, and the 1510 on it. Now, what if we were married filing joint? If we go to the detail and we go to the client information and say, well, what if they were not single but married filing joint? Let's do, there we go. And then we're going to go back to the forms and see the difference now with their married filing joint here. And now we have the 24,400. So once again, not being able to take the itemized deduction with just the gambling losses. So it's going to be beneficial to people who if you have people that are expecting to incur gambling losses because they like to gamble and they're going to have gambling losses, then you want them to basically track that information, especially if they have other itemized deductions such as a home which they will have the mortgage interest and property taxes on, and therefore possibly be over the standard deduction already. Then of course it's worthwhile to save all the information related to gambling losses, so that you could put that on the return in case there's any gambling winnings. If you're talking about somebody that does not itemize and they take the standard deduction, then they're probably not going to get a benefit from tracking the losses, even if they do have some winnings. But they might want to track the losses in any case if they do a lot of gambling, just in case they have a large amount of winnings. But if you're talking to someone that has a standard deduction, they're probably not going to itemize. Do they want to take the time to be tracking all of their gambling losses if they go on a particular vacation where there might be gambling or something like that? Might not be worth the time in that case. If you're talking to someone that does a lot of gambling and they're itemizing already, then it's probably the case that you do want to be tracking the losses that can be significant.